Hey everybody, it's Mark Yegge coming to you from a cold Athens, Greece today. Hope you're doing well. Just a quick market update for you. Hope you're having a fantastic week. Let me go ahead and share my screen. The same stuff we just talked about on my mastermind call where we go over all things market related. Obviously, I'm not going to be able to spend 45 minutes giving you what I see going on in the market, but I can give you a quick market update. So let's do that. So let's see if I click that button and that button right there. We are in a red market. We got 4 red lights right now, so govern yourselves accordingly. We had 4 out of the last 5 days are red, and it crashed the momentum. It crashed the moving averages, so not too good. This is interesting. The NASDAQ composite on a weekly chart is looking fairly strong, even though we're in a red market. Now, we're having a bounce off the 10-week moving average, and we're kind of consolidating in an area there where it wants to go higher through that 12,269 level on the NASDAQ. And if it does that, then the 13,181 is in play. That's quite a bit higher. It's like 8% higher. So we may have a run once this little red market is out of the way. Let's go back to daily charts. S&P 500, healthy move off the 50-day moving average. So that's good, even though we're red. This is not as good. The Dow is feeling a little more pain, actually penetrated the 50-day moving average, and it's back up over it today on a decent day. But the momentum is kind of looking a little down on the Dow, so that's showing a mixed signal to me. The New York is even more mixed. It's actually down and testing the 200-day moving average, that black line, as you can see. But fortunately, it's tested and passed the test here today with today's action. That's pretty good. The VIX, which is a inverse indicator, it's showing that the market wants to go higher. So it went down, it spiked up, which was bad for the market, and then now it's back down. It actually hit a pretty big low of 16, and when the VIX is low, that means the market feels safe, right? And then we had that spike up this week. So it's kind of a mixed market. These transitioning markets are a little bit mixed, but I think we're kind of bullish. This kind of feels a little bullish, like it's not really red, it's more pink. But you know what? I don't try to predict the market, I just play it. I think this is an interesting chart, and I'll leave you with this, and that is the Philadelphia Housing Index chart. So you hear all this bad news about the market, and the housing market's going to tank, and it's just going to be like 2008 because the Fed is raising rates. The market does not believe the Fed's going to raise rates anymore. In fact, the Fed said they're not going to raise rates. They said they're one and done. They're going to raise 25 basis points this week. The market didn't like it, but the market kind of likes what's going on in the housing market because it believes that rates are going to come down and housing is going to be back off and running again. And certainly if you study what the Fed has done in history, they've only printed money to get us out of trouble. And that's exactly what they're going to have to do again because they have no choice. They painted themselves in the corner, and so has our government. So that's the quick market update. I hope that was useful for you. Thanks for being here. Have a fantastic weekend. And I will see you next time on the next weekly market update. Take care, everybody. Bye.